Yo, what's going on, everyone? Welcome back to another Bitcoin Elliott Wave analysis. I'm still experimenting on the demand for these Bitcoin video updates, so this might be the last one in a while, and we might start going back to these altcoin video updates since the demand seems to be there. So if you'd truly like to see more follow-up updates for Bitcoin, let's hit that like button, subscribe to the channel if you haven't already to show your support, and comment down below again if you'd like to see more follow-ups. And in this video, we're gonna continue from our previous idea that we're still looking for a continuation of a correction. It's been a brutal past month or so, but it's also been a very rewarding one if you have been patient enough, as a penny saved is a penny earned. And that being said, we are just that much closer for this correction to be complete, ladies and gentlemen. And I say this with a heavy heart because I've been ridiculed quite a bit by both sides from the bulls and the bears, but I'm just doing my job to make sure to lay out the foundation for these high probable Elliott wave counts on the macro with a sprinkle of conviction. So where do we currently stand? We're going to have to continuously remind ourselves on how we even got into this position in the first place. So if we go back to our August 18th analysis, where I was very firm on this larger correction playing out, we identified what was a larger diagonal in the contracting variant. Remember, there's two variants of the leading diagonal. There's an expanding diagonal and there's a leading contracting variant. And this is the leading contracting variant that we have witnessed and identified. And this led us up with wild volatility of ups and downs along the way, creating a very strong imbalance between the bulls and the bears that gives us that pattern recognition. But without going too deep into the actual pattern recognition, all you have to know is that it was most definitely leading us into a larger wave one of a higher degree, hence leading, no pun intended. And 5 months of price action to the upside, if we were able to recognize a potential top, a multi-week pullback was on the table. Nothing surprising there, and that's what we're currently getting. And that is where I had to pull the trigger and say that this was likely the case. Well, fast forwarding to today, as you can see, not only did we get a technical break of that line, we also got what could be leading us into that first partner leg of a wave W or a wave A, depending on if you're seeing this as a leading diagonal of some sort. A little bit strange to see this as a wave A, but very valid, or an ABC that just goes straight into a wave W, which is currently what I have here. This last leg here, depending on if it's impulsive and we move faster to the downside, no problem. We just switch it to a wave A. Otherwise, we're looking for what could be a 5-way move into wave A, a B, and then a C that could complete off this correction. So we are about 70%, 70-80% with this correction being completed here, ladies and gentlemen. It has been a brutal past month, like I have said, and there is nothing more than I want than a massive move to the upside, and that is currently still the case on the macro. All we have been doing has just been focusing on the medium time frames to see what kind of data is being created so that we aren't bored with the price action. And this is why the Elliott Wave Theory provides us with such great context on whether continuations or whether resistance and support levels are going to be supported or not. And that being said, there's a very good chance that this wave X or wave B to the upside is complete. The implication of the internal wave X or B is really not, doesn't really matter is what I'm trying to say. What matters is that there is a rarity for a WXYZ to the upside, but the follow-up is now just making that a little bit more confirmed that this was a WXYZ to the upside. I mean, there's a few ways that we can actually count this, but I don't like to see this as just a simple or even a double zigzag. The internal counts are highly separated, meaning that we have our internal wave X as a distribution and our second wave X as also another distribution, both showing, portraying very interesting types of patterns. We have a triangle for this wave X, and then we have a flat for this wave X as well. So we have definitely distribution, as those are two distribution patterns. But the most important thing is our waves W, Y, and Z legs are all met with simple zigzags. There's a lot of ways to count it. However, it's very, very simple. Just looking at it here on the macro, there's most definitely either you want to see this as a 5-wave impulse, which we will discuss in just a second, if in case that these lows do get supported. And that is where the problem comes in, because there is often confusion between a WXYXZ triple zigzag pattern between what could be a 5-wave impulse. But again, there's ways to kind of mitigate this, and you have to kind of utilize some other simple technical analysis. And one of them is this 61.8% we have been discussing as well, which is a very strong resistance. So we were discussing that this 61.8% was going to be acting as a fair resistance, and we did get a rejection off those levels in between the 50 and the 61.8%. We have been distributing here in between the waves W, X, and Z. But most importantly, we did also discuss that it could have even also go up to the $120,000 levels before we started to kind of think that this may be turning more impulsive and more bullish, where we assumed that this wave 2 was in. Again, we'll go over that in just a second. But there was a very likely chance, and I stuck to that kind of conviction, that we were still looking for what could be a potential move to the downside. And the faster the better, ladies and gentlemen. And I give this sentiment again over and over on my social media, that you can be a bear on the shorter time frames, but also you can also be a bull on the macro. And that's where a lot of people start to, fall apart, because it's hard to communicate that idea, and it's also very hard to portray that in your analysis. And hopefully my ideas can, kind of give you a little bit more insight on how to kind of organize. The organizational skills is a far harder talent to utilize than just knowing and how to understand the risk management side of things and the actual Elliott Wave Theory. So that being said, I did mention that the issue with assuming the correction has ended here is that the one-day time frame represents just a single candle. That's hardly enough confirmation to be calling it done. And I said that the odds are still leaning towards the lows breaking one more time. And again, the faster the better, so that nature can heal quicker. And this would be that case. The faster we come down, the faster we're going to be getting out of these regions. And the reason why I say this again, that one-day time frame that I mentioned, very, very important keynote here, because if we pull up the daily time frame, we got to use a context of all the time frames here, ladies and gentlemen, not just from a timing perspective, because here, fantastic, there is a possibility of a 5-wave impulse, like I said. So there, leads us into 2 opportunities. But just to say that this wave 2 has ended here, it calls for a lot of gambling at this stage, because you want to have enough data, at least on the daily time frame, especially when you have 5 months of data leading up to this, and then you have another month of basically of a pullback and a move to the upside. Having this so short in time doesn't really make sense, even though that the 4-hour time frame might convey that some kind of ABC or even a possible WXY, which would be increasing the probability if we do turn this into a WXY where the lows do get protected. But until then, it would be very strange for it to have this wave to end here just now. Now, I'm not saying it's impossible, because we have seen quite a bit of those pullbacks. For example, these types of pullbacks, this type of pullbacks, that all led up to the upside eventually. And that would usually require confirmation. And that leads me to the second point here, which is the only way to confirm a bottom is a follow-up with 5 to 7 days of confirmation at the very least of candles with another 1-2 pullback. This would be a wild gamble, however. Like I said, you don't want to be gambling. There will always be opportunities, even if it means at buying higher levels. And that leads me into the second stage here, which is, yes, there is an absolute possibility that this can be completed, and that requires 5 to 6 to 7 days of confirmation. Better if we actually break the previous top, because that would be ultimately the major validation. But if we get, a few days of candles here, 4 up, maybe 3 down or something, 5 to 7 days is enough for it to call another 1-2 on the sideways, and then we resume the trend. So that would be a way to say that the correction has actually completed here entirely on the shorter time frames. But until then, we just simply do not have one thing, which is time. And we need time here to confirm things. And right now we don't have that. So that leads me into this case here, which was the original idea, where we still have enough context of the first 2 legs. And now we're just confirming this last leg, which is going to be the partner leg for this wave W or wave A. Again, if it confirms, impulsively to the downside, all we have to do is make a small shift in our wave counts and say that this is an ABC to the downside. Or if we get more distribution for wave B or something, or when we get some kind of transitional wave, very likely that this is going to be an ABC to the downside, where we break this previous low, And then it should be brief trading range here with some distribution and another follow-up. And that, ladies and gentlemen, will be the bottom, in my opinion, where we have more likely, again, we can go down deeper, down to the 90K regions. And I've also emphasized this in my previous videos that these levels here are going to be a pretty immense support, in my opinion, especially since this is going to be a partner leg, right? The Elliott Wave Theory likes to work with symmetry and geometry. So if we get, at least the minimum expectation of a 1-to-1, a 1-to-1, meaning that wave A is going to be equal in length with this wave C or wave Y, if you're seeing it as a wave W, then there's a very good chance that we're going to at least get some kind of support. And if not, deeper it is to the 1.618, absolutely fine as well. But the most important thing is working with these ratios, and the most important thing is a follow-up. But in that regard, if you're following the Elliott Wave Theory in that context, is that usually these wave 1-2 pullbacks will retrace a significant portion of the actual diagonal itself, and we still have so much room for how this could be playing out for an ultimate validation. But the key point here is context, right? We want to stick, 1 to 2 steps ahead of the markets and not jump the gun, but at the same time be a little bit cautious with the approach of what context has been provided to us, so that we don't go ahead and say that the correction has completed. And this is really the only way we can be doing it. We made that bold assumption that this was going to break. We got that confirmation. We got this first leg to the downside, a B wave to the upside or an X wave, and now we're just looking for confirmation. And that being said, that concludes my overall approach for how we should be trading this. Again, this is not more of a trading zone. These 1-2 pullbacks, usually there will be far more, from a market psychology standpoint, a far more bearish outlook than the actual outlook that has happened at a much lower level, around the $70,000 levels. So it goes to show how even market psychology oscillates with the price action. And if you zoom out even further, ladies and gentlemen, this 1 to 2 month pullback is absolutely phenomenal opportunity for the bulls to continue to build up more positions at these lower levels. Again, and it makes sense. I'm sure everyone is kind of bored with the price action as we speak. This is why we have these corrections in the first place. Now we're just getting a follow-up where people are kind of even more tired with the price action, and they're just using this last residual move to short the opportunity. And I can guarantee you that with high conviction at that stage, of course, it's never a 100% guarantee with anything, with any technical analysis or approach, is that there is going to be a fair amount of smart money and limit orders around these levels that's going to give us a fair amount of bounce at the very least. And we can still confirm on whether this correction is still part of a larger move to the upside. So hopefully that was helpful. I did my best to kind of articulate this as best as I can. Please make sure to hit that like button, thumbs up, do whatever you can to support the channel. If you guys like these Bitcoin video updates, also please make sure to hit that like button, subscribe to the channel if you haven't already. And more importantly, if you would like to see more Bitcoin video, or not Bitcoin videos, but Bitcoin updates and charts, we do offer a Discord membership where I do far more periodic updates throughout the week. And also we do offer an entry-level membership for Patreon, which is 2 updates a week. So any of those 2, just depending on your needs, depending on your level for Elliott Wave Theory, and just maybe you want to get a little bit more second of an opinion on how the price action works. The links are in the description below. Please don't hesitate to reach out to me. Thank you very much. I will see you guys in the next video. Hopefully this update was helpful. Have a fantastic rest of the week. Bye-bye.